ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Monday, the 18th of April, 2022. Thank you for tuning in. Now, we're going to get started here pretty soon. First thing I want to talk about, let's start the charts right here. Okay, I said start the charts, but there's a little delay here. I clicked the button. There it goes. Okay, what we're looking at here is two people here in America having a nice little snack of chicken. Now, this is a mukbang on YouTube, but I like to watch mukbangs once in a while. And, anyway, they're having a little snack of Kentucky Fried Chicken. Why I wanted to point this out is because might not be able to get that little snack of chicken, or at least not like we have been able to get that little snack of chicken, because we have got a poultry virus going through. It's called bird flu or whatever, and an awful lot of the poultry, it might just have to be culled. It's going to put egg prices way up. It's also going to make it so that maybe chicken products themselves might be in short supply pretty soon. And this is along with an awful lot of other food problems and food-related problems in the supply chain, where we're actually talking about quite literally food shortages, So the American-style snack, which is some countries, quite seriously, they make, let's put it this way, make food go a lot further in some countries, than here in America. We're used to having all we want to eat anytime we want it, and we're used to this. This is the way of life here in America. But suddenly it might come to a stop if there's food shortages. So I've been saying this for a while to you guys. If you get a little bit of extra weight, I don't know, maybe 20 pounds or something, you might come a time when you might need it. That little bit extra weight you got. Anyway, let's get in there and take a look at some other stuff. Let's take a look at the Fed here. The Fed is ready to move faster on interest rates. Well, guess what? It's happening, guys. It's happening right now. The everything bubble, which is the biggest mega bubble in the history of the absolute world, the Fed's getting ready to burst everything. It's the stupidest thing I've ever seen in my life. It's almost like they're strangling the economy. And then on the other side of this, when the economy goes into cardiac arrest, which is inevitable, then what are they going to do? Try to give it oxygen, put the paddles on it, whatever, and try to get it going again. So why strangle it on this side? Well, they say inflation. Inflation. Okay? Yeah, I know. Yes, we do have inflation. But the alternative to inflation is to destroy the economy because of inflation. Well, that's what they're going to do. They're going to put us into more than a recession. They keep talking, well, what is this thing anyway? It used to be when we had a depression, they would admit that it was a depression, and they would call it a depression. Seems like ever since the Great Depression, they've been talking recession. It's always recession. When a recession is bad enough, it's called a depression. And what they could actually quite literally trigger here is a depression. Not a recession, a depression. And I want to make this very clear. I'm using the word depression, not recession. So then what do they have to do on the other side of this? What kind of stimulus will they need? It's not going to just take your namby-pamby little bit of stimulus to get the thing going again. Once they drive it down, once they get it into cardiac arrest, once it needs oxygen, they're going to have to give it oxygen. They're going to have to give it the paddles just to try to keep it alive. Why do it in the first place? Oh, inflation. Okay. Here they go. They're ready to move faster on interest rates. They're going to try to cut 50 basis points, it says here. New York, the Federal Reserve is ready to raise interest rates at a faster pace to get a handle on America's pervasive inflation problem. This is not going to stop inflation. Okay? What this is going to do is possibly create a very slight little bit of disinflation. In other words, slow down the momentum of inflation. Yes, that's possible, but they're not going to stop it. At the very best that they can hope for is to slow it down just a little bit, but at the same time, they're going to destroy the economy. So here they're talking about raising it 50 basis point increases right here, and they've only raised it 25. So what they're at, where we're at right now is we're perched. The Fed is perched to act very quickly now. This is it. The boom is dropping in the next few months. So what can we expect for gold and silver? Well, let's switch over and let's take a look here at the gold price today. Now, normally when interest rates go up, you see the price of gold tendency is for it to go down. But in this case, there's forward-looking guidance or forward-looking expectations for gold and silver. We're dealing with not ample supplies out there in the real physical metal. And the situation has evolved to the point where gold is actually going up against a backdrop of raising rates. Okay, so we're probably going to see this trend continue, even though the economy is turning over because of what the Fed's doing. But what can you expect on the other side of this when the Fed has to change direction and try to bring this patient that's going to be put, because they're strangling the economy, it's going to go into cardiac arrest on the other side of this. When they have to try to revive this patient, where do you think gold and silver is going to go then? That's what I'm asking you. Where do you think gold and silver? I'm going to tell you where it's going to go. It's going to go to the moon then. But until then, until the Fed changes direction on this, we're going to see this steady, like we're seeing right now with the price, maybe small price increases. We could see maybe before this is over with the Fed, we could see the economy turning downward sharply. Equities turning over. The real estate market falling to pieces. Anyway, and what we could see is gold prices go maybe drifting up toward 2,100 or something like that. And silver prices maybe drifting up toward $30. But once this is over, that's when we're going to see the real explosion in price. So you're not going to, I can't conceive of you losing on gold and silver. The only thing right now is the premiums. It's a little bit of a fly in the ointment right now at this moment. Okay, I got to move on here because my charts are going to end, and I got to get this in and take a look. We're going to see in crypto prices, we're seeing Bitcoin at 39,340. We're seeing the Dow Jones Industrial average at 34,512. We're seeing oil prices today at 108. That's really high for oil. We're going to take a look here at the MOVE Index. MOVE Index is at 119. It's not quite making a peak today, but it's not going down either. It's staying up pretty high. This is your volatility in the credit markets. Bonds and rates today. We're looking at the U.S. Treasuries climbing again. We'll come back and talk about this. We're looking at a 10-year at 2.83, 20-year at 3.12, and a 30-year at 2.94. Dollar index, we're looking at 100.62 on the U.S. dollar index. And now, because my charts are going to quit pretty soon, I'm going to go back to bonds and rates. I want to talk about this for a minute before I end the show. Listen, guys, we're watching this debt market very carefully, especially the U.S. 10-year. We have been for a long time on this show, if you follow this show. This is a point in time right now where we could see the U.S. 10-year explode to the upside very quickly, and all heck's going to break loose if we see that. And it's one of the things we're watching. You know, it could jump like amazingly fast, and that would be a trigger point. As long as there's a certain amount of stability in the U.S. 10-year, well, we could see no real big reactions in the markets and stuff, but we get that sudden shift upwards in the U.S. 10-year, and I'm kind of expecting it because of what's happening with the Fed right now. We want to raise 50 basis points on the overnight rate, on the federal funds rate, okay? And they're not going to do just one. They're going to start eating them like you would eat potato chips, one after another, until they break this market. At the same time, there my charts just quit. Okay. At the same time, they're going to actually be pulling as much as $95 billion a month from the liquidity pool. That's the liquidity pool that they put in that's propped the markets up for all this time. See, they haven't really done a lot yet. They've been still sort of expanding their balance sheet up till this point in time. And they've been sort of just a 125 basis point hike in the overnight rate. And you haven't really seen the effect yet. They're going to push the pedal to the metal now. Now is when they're going to start to push the pedal to the metal. Now is when everything's going to start to break apart in the next few months. What you've been waiting for, action. You guys have been waiting for action for months and months and years, watching my channel here, and nothing's been happening. Nothing happens until it does happen. And when it happens suddenly. And we're right on the verge right now. This is it. It's starting to break apart. The iceberg's starting to break apart. The whole thing's going to start to snap and break, and it's like the Titanic going down. And now she's starting to go into the part where she's going to list. The ship's going to list. And when it lists, that's tipped sideways a little bit, then everybody's going to scream in horror, and they're all going to run for the exits. The dollar is sinking. The war in Ukraine has had its effect. It's had a tremendous impact. This virus has plagued us for like 2 years. It has had another compounding effect. And the way that the whole financial system has been put together from the get-go, being as it's an enormous Ponzi scheme, has had an enormous effect too, as well. Okay, guys. Thank you for listening to my show. Like and subscribe, and we'll catch you guys in the very next video. And, oh, listen, guys. If you got some friends or anybody, get them to subscribe to my channel. I need more subscribers. My subscriber base is just barely holding its own. And a few more subscribers to this channel and or the Delta Report would be great. And we'll catch you guys in the next show. Bye-bye.